Hey there, good to be here with you today. Welcome each and every one of you to Trading a Smaller Account. I'm Connie Hill. I'm sitting in for Barb Armstrong, who is probably having a terrible time in Maui. You know how that can go. And if you've been following her on X and you've seen some of the pictures she's posted, yeah, she's not having a good time. She misses being here with us today. However, I have consented to step in for her. Hopefully she'll bring me a coconut, maybe something nice from Hawaii. I wouldn't mind. But it's good to be here with you today. One thing that can really help us in our trading is if we're following what sectors are in favor and what sectors aren't in favor. I'm going to show you a tool here today that can help you decide pretty quickly what trends seem to be in the sectors. So stay tuned and I will share something with you here today. Now, I am joined in the chat by Mike Fairborn, good friend and fellow coach, great veteran of the markets. I'll be keeping my eye on the chat. I want to see your questions. I want to answer your questions. But if there's some things I can't quite get to, Mike's going to help me out there. So thank you, Mike, with that. Sometimes he might provide some links for you as well. So keep your eye on the chat. Let's go through our disclosures, and then I will lay out our agenda for the day. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for education and information. Don't consider a recommendation. We're going to be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. And so if you're used to using the web or a mobile, it's going to look a little bit different. Past performance is no guarantee of future results. Investing involves risk, including the loss of principal. Now, typically in this class, we're going to just take a quick look at the markets, see what's going on, because that's going to give us a framework to determine, what, should we have on our bearish glasses, our bullish glasses, our neutral glasses? What should we be doing? We'll follow up on one trade that I did with this class last month. Actually, this month. No, it was last month. And we've got a lot of additional stocks that we're going to be taking a look at here today, some example trades. But remember, they're just examples, and we're going to be looking at several different strategies here today. But all of them can be helpful in a small account. So in this class, we have some rules. We assume we're starting with a $20,000 portfolio, paper money portfolio. We won't put more than $5,000 into any one position. And the 5,000 has to do with maybe stock positions. Okay, we aren't going to have a whole huge variety of those. We'll limit them to 5,000. Max trading risk, try to keep it to 400 to 500. I usually am using the $500 amount. This means we're going to be focusing on stocks that have shorter term trends or intermediate term type time frames that we're going to be working with here. And we're free to go both bullish and bearish directions. So we're going bullish. Those are the typical strategies we're going to look at, looking at the stock, long call, short puts, buy right covered calls, short put verticals, long call verticals. And you really can have those be that list, your bread and butter strategies to use to help you build a smaller account. Now, not all investors that are working with a smaller account are really novice to the markets. They might be just taking a portion of their portfolio and saying, this is the part I'm trying to grow, maybe while the other part of the portfolio is maybe doing some other things portfolio-wise, maybe long-term or dividends or whatever might be the case. When we look at the bearish side of things, which we won't be doing today, we might look to long puts, put verticals, short call verticals. Sometimes if we get into some situations where there's some neutral trends, markets maybe not making a lot of progress one direction or the other, then we might step into doing something like with iron condors or calendars, something that takes on a more neutral stance as far as the market goes. So let's head on over to the Paper Money account by hitting the right buttons. And let's just take a quick look at the SPX. You know what's been going on. Hit another high, all-time high. I believe this was Monday's candle and date. This was the 12th. So yeah, that was Monday. SPX put in a new all-time high. This blue line is a 10-period moving average. It's been upward trending. The red line is a 30-period moving average. And so that's kind of more of an intermediate type time frame. It's been upward trending. And we may use, for some of our discussion here today, the RSI, Relative Strength Index. It gives us an idea of sentiment, gives us an idea, hey, is the market or the stock or whatever it is we're looking at more bullish, is it more bearish? Okay, RSI in this case is at about 58. Looks like it's heading up. And so anytime it gets above this 30 that's down here, that's when we'll say it's more in bullish territory. So it's been staying in some bullish territory for the 6 months that we see right here on the chart. The NASDAQ, a lot of some of our trades that we'll look at come from the S&P and from the NASDAQ indexes, so we'll focus on those. It did not put in a new high. In fact, it looks like it may have maybe some resistance building here, maybe around, oh, the thing shifted on me. That's kind of weird. Why is it doing that? Let me fix this though. I want to move this bar so it's kind of hitting the tops-ish there. All right. So maybe some resistance around 25,790-ish, right? That area. Could this be a double top formation? It could be. We'll have to see. In order for us to maybe take a reversal look on the NASDAQ, we would want to see the price go below kind of the midpoint area on its pullback. So that midpoint area on the pullback is down here. And so really, it would need to maybe breach that area. Although if somebody saw it breaching this lower low here, like going down past this and forming a lower low, some might use that, okay, as well, saying, hey, we've got a lower low, maybe we've got some reversing going on. But right now, are we seeing that? We're not seeing that. Chuck said, how is the best way to determine the strength of the trend? I'll share with you, Chuck, one of my go-to studies that I like to use is called ADX. Let's go ahead. I'll bring it up. We'll put it up on here on our chart here. In fact, it's our very first study here. And it stands for, what does this stand for? Maybe I'll click on the question mark and remind me. Average. I couldn't remember what that A stood for. Average Directional Index. And it's interesting with it is, let me make that a little bit bigger if we're going to refer to that by making it a little bit bigger in the average volume. I hit the wrong one, didn't I? ADX, here we go. I don't want it to be a 1, I want it to be a 4. Okay, I want us to be able to see it really good. When the ADX is in a range of 25 or higher, that's when we say, oh, it's pretty strong. Okay, the NASDAQ trend on the ADX, you can see down here is 10.8. That would give us an indication, okay, it's not really, whatever the dominant trend is, whether it's bullish or bearish, it's not that strong right now. Okay, great question, Chuck. That is a study that you might choose to put on your charts. We might leave it there for a little bit. Let's go back and look at the SPX real quick with that ADX in mind. And it's down here at what? The 11.5 is what it's reading here right now. Okay. I'm not going to give it a ton of room here, though. I'm going to kind of maybe squish that. But if you want to reflect on that and look at it as we talk about some of these different stocks, you're welcome to do so. All right. I think we're caught up with those questions there. Michael, grab anything I don't quite get to. All right. Let's first, now that we've established, yeah, we are in a bullish market conditions, but not the strongest of trends. If we look up here, say in September, maybe give us a little bit more of a look here when the market was trending kind of bullishly here, this ADX was above 25 at certain points. So like right here, the value there looks like it was 34 and the peak there was about 30. Peak there was about 29. And so all through these periods of time, the ADX would have signaled, yeah, the trend is strong. And so that is actually one of the things we might look for is for a reversal is this trend strong or is it weak? And on this ADX, it's measuring the current trend, the current dominant trend. So we would look at that and say, okay, kind of the intermediate trend, what is it doing? Is it strong, bullish, or bearish? And so it's a little weak, quite weak actually, but still is the trend's our friend till the end, till it changes things on us, right? Yeah. The one trade that I wanted to follow up with you guys, I can remember what it was. Yeah, I wanted to show you something because we're going to use this today. The one trade I was going to show you is the last time I taught this class was December 19th, and I actually haven't been in here since then. And so we didn't do any follow-up on the trades that we did that day, but there was a trade that we did on Pan American Silver. PAAS is their ticker symbol. We got into the trade here. It had kind of run up, kind of flagged sideways a little bit, and then it looked like it was bouncing nicely off this 10-period moving average here. So we were basically taking a little bit of a bounce entry. We did a short put vertical on this, and we can see, because I marked it up, this is the day that we got out of the trade. I have it in gold. Gold indicates a positive outcome for the trade. And we'll just go to the monitor account statement real quickly. We initially brought in 60 cents credit, or $60 on 3 contracts, because we position sized. We said we are willing to get out if we can buy it back at 18 cents. It never actually hit the 18 cents. And so it got really close to that area, and I was just cleaning out some trades. I'm like, oh, well, let's go ahead and just take some profits on it. I canceled that order, put it in for 23 cents. We bought it back for 20 cents. So the net on that was $40 a contract, $120, just kind of a little base hit, nothing too exciting. But when you decide where you want to get out, when you get in the trade, it makes your trading a lot easier. And that's the reason I really wanted to show you that. Yeah, Stoic-ish is saying, sometimes we might want to look at rate of change. That can be something that is useful study as well. Appreciate that. All right, next up, I want to share with you a tool that can help you just from a quick glance see what sectors are doing well, maybe where you might want to go fishing, right? You go fishing in the fishing holes where they're biting, right? You don't go fishing in the fishing holes that the fish aren't biting in. And so we want to do that with our trading as well. I'm going to bring up here something that is a 12 grid, and it has each of the sectors in it. And it has is in this bottom corner, just the SPX overall. But we can see really quickly from this chart what's going on, right? So for example, energy, has it been uptrending lately? Yeah, it has, hasn't it? Maybe let's do a different color than green. That might blend in too much. Let's try this. Materials has been upward trending, kind of flattening out a little bit here. What about industrials? Oh my goodness, nice strong trend. So maybe energy we could pick around in, industrials we might pick around in. Something we don't see a lot of is sometimes real estate doing well. Real estate's down here on the bottom, so it has been trending nicely. This is a daily chart for the last 30 days. Okay, so we're just kind of getting what is going on right now. So financials has been a little bit weaker. There's been some rotation in information technology as a sector. Information technology has been weak, but there are strong pockets. You're going to see some pockets that had been weak that are now gaining strength, and some stocks, some pockets, industry groups that have been doing well, that now they are showing the weakness and kind of bringing down that whole sector. So you got to be kind of careful in information technology. And something that we don't see a lot of is that our consumer staples and our utilities had a nice little run, and usually we'll see those be bullish in situations where maybe the market's a little bit more bearish or sideways, and people are moving to what they consider those safer havens, right? So it's kind of an interesting mix of what we're seeing here. Now, I think this is helpful to have. I have it up on, I've got a 43-inch TV on my personal computer, and I break out different areas that you can do some detaching with the platform. And so this is one that I just have just kind of sitting up there in the corner. Just take a quick little look at it during the day. I'm happy to share this with you. Okay. Oops, let me get my drawing tool off here. I'm just going to minimize. Well, let's just do this. Let's come back over to say our Thinkorswim. And I've got it right here. I call it Sector Matrix Dark 1 month. Mike has a really cool one too that he has used that shows 3 months. That one I like to use as well, but kind of for shorter term momentum, where we've seen the strength. It's a quick glance here. So I'm going to share this with you. Remember, you do not need the description, okay? So where I write in Sector Matrix Dark 1 month, don't put that in, okay? Just grab the first part of this URL. And those of you that are looking at this, you're not here with us live, you're looking at this on a recording, you may want to pause and put in that little URL. I'll put it in a text box here just real quick, so maybe you can see it. This right here is all that you need to type in up here. If you do say setup, open, not setup, what is there? Setup, open shared item, and then you pop it in here, right? Put in that formula. Don't put in all the verbiage. Stop at the F. Hit preview. Do you want to call it something else? I call it Sector Matrix Dark. You could rename it a grid as something else, okay? And those of you listening on the recording, just get through the capital J through the F. It is cap sensitive, remember. Some of you might go, ooh, what is this after the capital J? Is it a 1? Is it an L? I don't know, honestly. So if you put in a 1 and it doesn't work, try a lowercase l. Okay, those are the two that it could possibly be. All right. So as far as maybe some stocks we might want to look in, fishing holes we might want to go, we've kind of identified where some of those stronger sectors are, okay? Typically, sometimes it'll be 1 or 2, or maybe the whole sector's performing, or it might be isolated to some industry groups. So the first stock we're going to take a look at today has a really appropriate ticker symbol. It's Lunar. And one thing we're going to look at here is, what are these companies doing? What are they involved in? Okay, if we want the stronger sectors, so we're going to use our Analyze tab. Come over here to Fundamentals. This is in the industrial sector. It's called Intuitive Machines. Now, this is not something that's pretty common. These guys design, manufacture, and operate space products and services in the United States. Now, I don't know about you. I'm not usually out shopping for space products, but that's what these guys specialize in. And right now, is it getting a little bit of excitement revolving around space objects? Yeah, we're seeing a lot more excitement about that. So this little stock is taking off. Now, we can look down at that ADX. That value today is 43, so that's letting us know that is a strong trend. And with our RSI, it's just moving back above that 70 threshold. That is what we consider overbought. That just means buyers are in control. It doesn't mean bad, run away, ooh, it's going to fall. Okay, it just means buyers are in control right now. And then we wait for it maybe to come down below 70 to let us know that they aren't in control anymore. So on this one, I would say here, we've got kind of a break of short-term resistance. In fact, it's really started to run a little bit more than when I saw it initially this morning. But can you see how maybe this was some short-term resistance? And I believe this is an all-time high for this stock right now. Let me double check. We'll come out here to Max. Okay, it's not an all-time high. Looks like maybe an all-time high was out here in January of 25, so fairly new stock. Up here, maybe a little bit higher. The high here is $24.95, so maybe about $4 out of reach of its all-time high, which was just a year ago. Okay. Well, what can we do with this? It's not an expensive stock. If you are working with a smaller account and you're looking for some lower price stocks, that this particular one has a lot of implied volatility. Why is that? Because it's moving, right? It's expected to continue to move. When was this? This day was November 21, so the week before Thanksgiving. The low price here was $7.78. Today, hitting a fresh new 52-week high here, right at 2206. So yeah, that thing is moving around. And when you have stocks that are moving like that, sometimes it's nice when they run up, but you feel a little bit like you're on the major bad roller coaster when it drops. So I'm going to say this is not for everybody, the implied volatility and how volatile this stock might be. But what we're going to do here, if you were a stock trader, you might consider buying the stock because it is a lower price stock. You also might consider doing something with an option. Okay. Now, I found something really interesting here this morning, and that is the prices, the implied volatility priced in some of these options is out of the world. I shouldn't say out of the world. It is lunar, though, but just really high. So what does that mean? It means sometimes people might want to be sellers. Now, I came out here, I saw a 38 delta, a 33 delta, a 28 delta, a 23 delta. And what was really interesting is we're getting some fabulous returns, even selling something a little bit more out of the money. So I'm going to go with this, and I'll show you here. I'm going to go with the 18. We're going to sell the 18 that's at a 23 delta. Many times traders look for a delta somewhere in the 30s. Somebody wants higher probability, might go out and say, okay, let's go out to the 20s somewhere. I'd rather, if you'd rather have a higher probability of success compared to higher return, that's why you go a little bit further out of the money. So 23 delta, a lot of times people might not necessarily want to gravitate to, but let's go here. We're going to say sell vertical. We're just going to keep it $1 wide. And I'm gonna lock this in here. 30 cents. For you, is that an acceptable credit? Well, you might go, well, what is it? What does that calculate to? And so if we say our 30 credit, which is our max theoretical gain, divide that by its max theoretical loss of 70 cents, that's about a 42% return. So as I played around with this, I started here about the 33, and I went a little further, and a little further, and a little further. You can see this. This is starting out right now at a 65% probability of expiring out of the money. That's what this column is right here. Okay. Out of 23 delta. And it's a pretty, I'm going to say juicy. I'm going to say it's a pretty juicy return. But again, it's got a lot of implied volatility. The idea with this is that we would be selling the option. We just want it to stay above the strike price of 18. Right now it's at 21, almost 22, whereas 18 is right where my mouse is. Okay, that is where that 18 is, and we'd want it to stay above there. Okay, will it? We don't know, but we are going to place a paper trade on this. CBA was asking, is this high IV? Very high IV. Is this speculative? The stock itself, I don't know that it is speculative per se, or that the trade we're doing here is speculative because it's a high probability trade, but the stock itself is volatile. And that's why I say it might not be for everybody. Okay. If we were going to look, let's go back to the trade tab here. I'm going to open this up. It's beta, which sometimes in Barb's class, we've talked about beta here. A beta represents the volatility of the stock. Usually it's measured over 5 years. The stock we saw earlier hasn't been trading for 5 years. But a beta of 1 means that it's about average for a stock on the S&P 500. If it is a 2, that means it's actually twice the amount of average movement, which is pretty significant. So a beta of 3 is super high, okay? And not in everybody's comfort zone. And that's a way that you might be able to distinguish that, as well as looking at that beta. If you're more comfortable with stocks that are kind of on like the kid roller coaster, a little bit up, a little bit down, a little bit up, a little bit down, then you would want a lower volatility number, maybe closer to 1. Some stocks might even come in a little bit lower than that, and so you wouldn't expect as much movement out of it, but you also wouldn't expect the same type of payment out of it. Okay. Let's see, Sandeep says it's got an ATR of 1.6, so it could move to 18 fairly quickly. It could, but remember, on a short vertical, we're looking for time to decay in our favor. Or if it makes a big move, that can do it as well, helping us lock in some profits here. Now, I'm going to go ahead. We're going to put this in. If we are going to risk $70 on this trade, how many contracts can we do in this account? I'm going to go with $500. I'm going to divide that by, divide that by 770. So we could do 7 contracts here. Somebody might say, maybe it's a little, more volatile than you're comfortable with. Maybe you do 2 contracts and test it out in your paper money account. Just kind of see how it feels, see how it runs. Okay. For our class, I'll go ahead. We'll put it in at the 7 contracts. So bring this number up. And we're also going to say when we get a chunk of the 30, okay, a dominant chunk, let's buy it back, get out of the trade, say thank you very much, and be on our way. Okay, what is that chunk? You get to decide. Is it 60%? Is it 70%? 80%? Let's go here. 30 times, let's go with 70%. If we have 70% of this premium, we only have 30% left. So I would multiply this by 0.3. It says, okay, at 9 cents, go buy it back at 9 cents. So that's what we're going to do. We'll put this in as a limit order. If it gets to the value of 9 cents, man, go take us out of the trade. Say thank you very much. Move on to another trade. We'll do confirm and send here. And let me see if I have a bucket here that we can put this in. I'll just put it in my unallocated ones for now, but I may move this into a group. I may be helping Barb out with a class in a week or 2 when she goes to a workshop. Then we can check the progress of that. Do you think the 17 put could be assigned? It could be. We don't know, right? Theoretically, once you sell it, then yeah, the stock could be put to you. Again, it's an inexpensive stock. In this case, possibly if the stock did drop. So yeah, it could be put to us at 18, 17, whatever that strike price is. We can look at probabilities, which are just a calculation, right? This is saying, well, it has a 65% chance of expiring out of money. On the 17, that's even a little further out, it has a 71% chance of expiring out of the money. So theoretical in nature, never guaranteed, but it kind of gives you an idea. Okay, that could be helpful. Where would you consider going out if it goes against us? Great question. We could consider a technical here. We could say if this thing, because we're seeing a little breakout here, we could say if this thing comes down and say closes, say it closes below the low of this candle, we might want to consider getting out, even though, I mean, we could let it roam around a little bit if we wanted to. Somebody wanted to be more lenient, you could do it maybe a little bit under this 30-day moving average. Some people might not feel like, they might feel like, I can tell it's going down, Connie, well before it goes down below the 30-day. Okay, so there's some different ways you can decide where you might say, it's not working. Some might take this old resistance becoming new support. It should be. They might go 2 or 3% below that. You could do that as well. That could make sense. Okay. All right. That is our industrial stock. Let's go to a different sector. A stock in a different sector that we're going to look at here is CCJ, Cameco Corp. You guys heard of Cameco Corp? They are in the energy sector. And let's maybe go 6 months here. I want to go to the analyze. I want to look at what the company does. They are in that energy sector, as I mentioned. Okay, they are in the business of providing uranium for the generation of electricity. Are we in need of sources of electricity to run these high-powered semiconductors that are, running this AI type stuff. Yeah, people are trying to get generation of energy from various sources. Okay, so CCJ Cameco is somebody that works in that uranium area. Are they the only one? No. But what we saw on this stock was that it had been trending. It's been kind of in an uptrend for the last 6 months. And more recently here, looks like, it had this little high point about 110, pulled back. Some might say, hey, that kind of looks like a cup pattern. Usually the handle goes like that, but if it doesn't go like that, maybe it goes flat. Or maybe you look at it and say, gee, it just broke above that resistance around above a 111 today. Maybe that is your potential entry. So we look down here at the volume, it's already got average volume today, and it's still early in the day. So it could possibly have above average volume on this breakout, which makes you feel a little bit more secure as a trader if you have volume running, following or coming with the breakout in price. Now, maybe yesterday, some people might have felt comfortable that was the breakout there. There might have been some people that are like, it's still pretty close. Let's see if there's some follow through. And today I would say gives us the follow through, gives us that information. Okay. Look at the ADX. Look at the ADX, says Shane, by Shane F11s or 111. What is that? 35. Okay. So anything above 25 is high strength. And the higher you get, the stronger the strength of the trend is typically how that indicator works. Our RSI, it's above these 70. So it's in this area that says buyers are in control. Now, this is not a tiny price stock. This is a bigger price stock at 116 right now. And let's look at the implied volatility here. Is it quite a bit lower than what we were seeing with our first stock, Lunar? Yeah, quite a bit. Its beta is 0.95, so it's a little bit less volatile than the average stock on the S&P 500. So people that are like, okay, I don't want to be on the wild ride coaster, might have a better comfort level with a stock that moves about like that. Implied volatility, it's a little high, but it's not extreme like what we were seeing in Lunar. In Lunar, it was like super high, and so people might gravitate to selling. Here, you could gravitate to selling because it is decent implied volatility that's priced into them. In this one, I was looking at doing a different trade here. Okay. I was looking at coming over these February options. They're the most liquid. Not a ton of liquidity in these weeklies. Okay. And looking to do here a 115, 120 long call vertical. Can we do that with our account? Yeah, we can do that with our account if we say buy vertical. It is a $5 wide spread. That would allow us to do what? We could do 2 contracts here. 2 contracts, this is our net debit. Our max theoretical loss on each of those contracts would be $218. That would keep us below that 500 threshold if we did 2 contracts. Okay. Yeah, so the question comes in here from Sai is the, the high RSI an indicator of overbought on the RSI. When it's above 70, yeah, technically it falls into that overbought area, but it doesn't necessarily need to be negative. It means buyers are in control. How long have buyers been in control? We've been pretty decent in control here after this little run up, and getting into that above 70 just says, yeah, buyers are in control. And you can see an RSI stay up in that area for a long, long time. They don't have to. You can see here recently, it came up, it came down, was up there, came down kind of quick. So it's not guaranteed that it's going to stay there, but they can stay there. All right. Let's see. Michael says your beta on this stock is 1.3. Maybe check this, Michael. Let's go back to our trade tab where we see that beta calculation. It's because, let's see if it's because maybe I still have a fast beta on this. Let's see. I clicked on beta, brings up this. I'm going to go to calculations. And then it says beta calculations, standard or fast. Standard incorporates the last 5 years. Fast incorporates just the last year. So if you've got a newer stock, you can change that to a fast beta, but it will change all your stocks to fast beta. Okay. And you might have stocks that have been trading for 20 years that you wouldn't want necessarily the fast beta on. You'd want to make sure to come back here and change it back to standard. So I'm not sure why yours is different. Yeah. Earnings on February 9th. Yeah, we always want to be aware of when earnings are. Now, is it possible this stock maybe could make the move before earnings? Yeah, it's a possibility. We've got 3 weeks before they're due to announce. And so we are going to do here, we're going to do those 2 contracts. We're going to do a first trigger sequential. We're going to create an opposite order. And when we get a chunk, I'm going to lock this in here. When we get a chunk of our max theoretical gain, we're going to get out again. It's really hard to milk every little cent out of these verticals. It is really hard to do that. And so that's why many people will say, you know, if I get a majority, let's just be done with the trade. Say thank you very much. If you were able to lock in some profits, great. Okay. 5 minus 2.18 is going to be our max theoretical gain. That's going to be 282. So we have 282 to gain. I'm just going to write that little number in here because we're going to use it in a moment. So how many contracts can we do here? We have $500. $500 divided by, well, basically 2 times that is where we get the 436. So our max loss, if everything in the world went wrong in this trade and it went down to 0, right, that would be below our $500 threshold. So that's why I said do the 2 contracts. All right. Now, if we're going to say when do we want to get out? Well, 282 is our max theoretical gain, super hard to guess. So again, let's go for a chunk of it. This time, let's go for, say, let's go for 70% again. Okay. So we are going to multiply this by 1. Well, let's go by 0.7. Which is $1.97. So we're going to add $1.97 to 218. And that's where we would love to see the stock get to and say, we'll buy it back if it gets up to $4.15, which is pretty close to a couple dollars. $2 of profit on 2 contracts puts us in the ballpark of about $400 gain on the trade. So that'd be nicer than the trade I showed you earlier that was on the credit spread. It would bring in a little bit more if it were to do that for us and go up a good distance and then let us get out. We need it to go above what? We need it to go above whatever is short, which is the 120. Okay, I'm going to hit confirm and send here, and let's see where 120 is. 120 is, I'm going to put my mouse there, 120 is about right there. Okay, do we need it to move? We do. Is it a large move? I'd say it's kind of a relatively small move for this stock. Okay, and if it just broke out, our expectation is it is likely to continue to go, although never guaranteed, right? Yeah. All right. BA or CB says BA spreads are wide. I'm not sure B/A spreads are wide. I don't think these spreads were that wide. 35 cents divided by 835 is going to put us less than 5% of a spread here. So I'm not sure if you're referring to that, CB, or something else. Okay. Chuck says, you know, there are 2 drop downs on the beta settings. Which ones are correct? Let me repeat what I said there, okay? On the beta settings, since I went here, we'll talk about it. Click on just beta or the flash. Okay, go to calculations. Standard beta, when you go back and read this, it says it'll do it over a 5. It'll take in what's the price movement over the last 5 years. And that's standard, and that's what is commonly used. Okay, so it's not, is it right or wrong? It's more commonly used. But if you've got a stock that's new and you need it to calculate over a shorter period of time, that's when you use the fast beta. Okay. But when you change that, it'll change it for every stock you look at. And you might not want fast beta there on every stock. You might typically just want to keep the standard. And in special circumstances, change it over to the fast setting. So hopefully that makes sense to you. Let's see. Do we need to read and confirm? Yeah, we typically would. I maybe went a little fast over that. There's not a link. You're saying, can you add the correct link to your grid in the YouTube description? I will put a link to that. Any scripts that I share with you, they're not guaranteed as accuracy or timing, but I will put it in the verbiage of this class as well. Yes. All right. A couple things we need to talk about here real quick. I hope you've subscribed to our Trader Talks channel. This makes it so much easier to find our content. Mike Fairborn, he's been helping in the chat. You've been fairly nice to him. Mike hasn't had too much to have to stress out with you guys. But if you subscribe to the Trader Talks, there's that little icon that's blue, looks like YouTube, and it says subscribe. You click on it once, you're subscribed. You click it on it again, you're unsubscribed. So just do it once, okay? But then you can see our content. Coming up next after our class here is going to be Advanced Charting Techniques with Cameron May. You could see, oh, maybe you want to catch James' Investing Master Series today, or maybe you want to check this out, Mike's Market Sector Analysis. He's going to be coming up here in a couple of hours. Okay, so you can have it notify you. You can look at the playlist. You can do some binge watching if you want. All right. So just, it makes it easier to find our content. It improves the algorithm. Something else that improves the algorithm as you exit, if you hit the like button on the way out, that will improve the location of that, help other people find this webcast as well. Now, I want to go through a couple of other things with you. Okay. There are some additional stocks that I thought we might take a look at here. We might just have time for one, and this is going to be for a stock purchase. Okay. Stock here is NGD, New Gold. Okay, what happened with some of the stocks within the silver, copper, gold mining? Are they kind of in demand right now? Yeah, they're kind of in demand right now. We can see the 6-month chart. The low here, the stock was at $4 and some cents. Typically, we might not even have a stock at $4 on our radar. It finally popped above $10, which is why it came on my early morning mover scan, because I typically won't work with stocks that are under that $10 threshold. Your threshold might be different. And then as we look at it maybe a little bit more closely, one will point out the ADX is above 25. It's at 30, so a strong bullish trend. RSI just move it over to the overbought area that buyers are in control. And what's it giving us here today? Some of you might like the hold. It's not the close of the market yet. This could pull back, right? But right now it's looking like it's giving us, at least it's trading above the high of the low day. And some people like to use that as an entry. This is one that could go in somebody's portfolio just as a stock. And that's what we were going to do with it. And I'll just kind of do it real quick. I did a position size to it, position size for 374 shares. And what might you use as a stopper to know that things are wrong? Well, what I was going to use here is just below this 10-period moving average, maybe taking the low here and going a little bit below it. So this is the 10-day. Some people might not feel comfortable letting it come clear down here to the 30 to know that they're wrong. They might go, I can see that it's reversing its trend, Connie, well before it goes below that. And so maybe a little bit tighter stop some people might want to do. So I was considering doing 968 as my stop. 968 is pretty close to where my mouse is right now. That's at 969. Okay, so that could be another consideration. So for you, you're trying to build a smaller account. There's a lot of different strategies available to you. And one thing that helps you a lot is if you will paper trade these example trades that we do with you in your own paper money account so that you get comfortable. Okay, that you get comfortable with what is going on with the trades, getting comfortable with the strategies. If you're new to options, go hit Getting Started with Options. Cameron May teaches that class on Tuesdays. I believe it's at noon Eastern time, where he walks you through every week, one strategy. You go into depth on it, you understand it, you learn it, and then you know, if you want, you go paper trade it and see if that's a strategy you're feeling like, oh, I could get that. Okay. So go ahead and whether it's these trades or others that you find, put them in your paper money account and practice doing that. Okay. Now, I did not see a survey out there today, but I have enjoyed my time with you here. If I can follow up on some of these trades in one of my classes, I will. I do I do straddles and strangles on Mondays, and I do calendars and diagonals on Thursdays. We did not have a trade that went in there, but if one of you are following the trade and you ask me a question about it in the class, we can pull it up and just take a quick glance at it, see what's going on with it. Okay. Appreciate you being here, Mike. Have a great, Mike, thanks for your help here today. And all of you have a great Friday. Come back 15 minutes, go refresh your beverage. Remember, the market will be closed on Monday for Martin Luther King Day, so we won't be here, and you should be out having a, I don't know if you can do a barbecue in January, but maybe some of you could do a barbecue in January. Enjoy the day. All right. We'll see you back here in 15 minutes with Cameron May, Advanced Trading Techniques.